Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss how to beat Cathie Wood's ARKK or innovation factor in stocks.
Hello everyone, my name is Radovan Vojtko, I'm CEO and Head of Research at Quantpedia. Today we will discuss growth strategies and we will discuss the innovation factor in stocks. So it means we will try to find some systematic way how to pick innovative stocks. We will check out what is the performance of this factor and we will try to beat Cathie Wood in her game. Who is the Cathie Wood? Those of you that have not heard this name, Cathie Wood is a portfolio manager. She is very well known for running pursuits of the funds that are directed to invest into disruptive innovation, into innovative technologies, etc., etc. He founded her own company called ARKK Invest. The best known fund is ARKK. I will show you the performance of the fund. She is very well known because she had a very big position in all the cryptocurrencies over the years 2020, 2021, which paid very well for her, and there were a lot of inflows into her fund. Unfortunately, of course, 2022, 2023 was not a year that suited her very well, so the fund did not perform very well. All of her bets on innovations didn't look very well. This is the performance of the fund. So she is trying to buy companies that are innovative. Now the question is if we can replicate her ideas or if we can replicate her approach in a systematic way and do it somehow a little better. The innovative companies, or trying to pick the innovative companies in a systematic way, those are the strategies that are related to growth stocks. We have a few of those strategies in our database. There are not a lot of them, but there are some. So it's not a very popular style, but it's a style that is covered by academic research. So we can find some papers, we can find some strategies that are related to growth stocks in general. We wrote an article about the new way how you can build a systematic innovation factor in stocks. Firstly, some ideas why it makes sense to invest into innovative companies. The reason for that is because when you have a company that's really innovative, there is a high probability that it will grow fast in case the company is successful and it's able to cash out on those innovation, on those profits. But of course, it's also very risky. So those companies are sometimes very risky because you need to spend a lot of the money and you need to put a lot of the money into research development. So you can gain a lot, but you can lose a lot of money when you are trying to find the most innovative companies and invest into them. We try to build the innovative factor systematically. I mean, there is no single mutually agreed of how to measure the innovativeness of the firm. You can, try to build it based on some fundamental data, like how much company spends on research and development. You can use different surveys in which the company executives answer what they think is the most innovative companies in their field, etc., etc. We decided to choose Fast Company's list of 50 most innovative companies, which is the survey-based measure. This list was firstly published in 2008. It's really available. It's not the only one measure. You have the Forbes top 50, etc., etc. So a lot of the lists like that. So the lists of the most innovative companies, we are using this one because it has a long history and it's easy to find out. We downloaded the data. We checked what companies are in the list. Of course, it's not very surprising that most of the companies that are in the list are not publicly traded. They are some startups or they are not companies that can be bought directly on the market, but there is still some subset. It's around 20 to 40%. So the number of publicly traded companies out of the list that you can buy because they are already listed as a stock. So as you can see, it's sometimes between the 9 to 17 or 18 stocks from the list. So it's like 20 to 40% of the list, which consists of 50 companies. So we downloaded the list, we checked which companies are publicly traded, and we selected 10 of them. So the 10 that are the best from the top of the list. And then we invested into that portfolio. So the portfolio is equally weighted. We can call this portfolio innovative portfolio. The list is published every year, approximately in the middle of the year. So every middle of the year, we establish a long-only portfolio and we hold stocks of companies identified in that year's list as the top 10 of those that are publicly traded, and we rebalance the portfolio every year. The question is, what is the performance? So firstly, we can check what is the performance of the portfolio against the S&P 500. So over the last 10 years, from 2013 until the end of the 2023, the SPI had performance around 12%. Of course, the innovative portfolio outperformed the S&P 500 by 6%. So those innovative companies, they usually outperform the broad market. But there is always a price. The price is the risk. So as you can see, the S&P 500 had volatility around 15%. The innovative innovative companies have nearly double the volatility. So Sharpe ratio is lower. Of course, the maximal drawdown is also significantly higher. So S&P 500 had maximal drawdown 24%, the innovative portfolio minus 60%. When we try to check what is the alpha of the portfolio, we can see that the alpha is positive. So I mean the innovative companies outperform the broad market. The question is if you can explain this alpha. So is the alpha explainable only by which companies do we buy, or is there some real unexplainable alpha? So we ran factor regression. We were interested to see what are the factor drivers. I mean, the most important driver is the size. It's a little surprise, but on the other hand, the most innovative companies are usually the smaller companies. So it should not surprise us as much, but I mean, it's the most significant driver. So we are buying mostly the smaller companies than the companies that are in the index. There is also significant gap in how the companies are distributed among the sectors. So we are significantly underweight industrial, value stocks, financial stocks, consumer staples, consumer discretionary and energy. We are also surprisingly underweight technology. We are overweight healthcare and materials. Healthcare is not always, but I mean a lot of the time. So here is the performance of the innovative portfolio versus SPI. As we can see, there is a period in 2020-2021 when our factor model is not able to explain the alpha of the innovative portfolio versus the broad market. So there was like a real run-up from these innovative companies, and it was especially the time when the ARK Innovation ETF had a run-up in the price. So I mean, investing in those innovation companies, it was extremely popular at the time. But when we take a look on the current situation, I mean, all of the alpha that's not explainable by systematic factors is already gone. And what remains, I mean, we can explain it by underweighting or overweighting some sectors in the market. That's how the innovative portfolio look like against the SPI. Now we try to compare our performance of our portfolio versus the Cathie Woods fund, ARK Innovation ETF. Here is the result. So until 2019-2020, we can see that our portfolio has like very, very correlated performance to the Cathie Woods fund. After 2020, portfolio outperforms Cathie Woods fund by, I mean, significant margin. I mean, when you try to pick those innovative stocks by yourself, you can very easily beat the Cathie Woods. As I said, it's not without the risk. Portfolio is really, really volatile. So I hope that you like this article. It will give you some understanding of how those innovative thematic ETFs are built, how you can beat the performance of the Cathie Woods fund, even by yourself, by picking 10 stocks or few stocks. And as I mentioned, I mean, those growth stocks, they can offer exciting performance, but on the other hand, they have like significant risk. So it's not possible to invest into the strategy without some market state overlay or some macro overlay or some fundamental overlay, because I mean, it's really, really risky portfolio. So thank you very much. Please subscribe to our channel. There is a lot of content related to quantitative research, and I hope that you join me in the next video. Thank you.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.